Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Friday. It's Friday the 12th of March. So it's the last day of the second trading week of March of 2021. Now it's 7:52. I guess I couldn't sleep this morning, so I wanted to do this a little extra early. But I hate to say I told you so, but I did. I told you so 3 months ago, a month ago, a week ago, and the last few days. The Nasdaq 100 is not looking good. The S&P's down just a bit. I mean, it went up like crazy yesterday, making new highs and all that. But Dow Jones is looking stable. The Russell's not really doing anything. But look at the Nasdaq 100, down 175 points pre-open. And if you look at the chart, you will see that we hit the 50-day moving average, just as I expected, and we backed away from it. So that's telling me, again, that momentum levels, and I'll go through momentum, and I'll explain to you. I want to show you this because it's crucial right now. And again, and I'll show you why I'm saying this and what it's all about. So as you could see here, look at the number of stocks trading above the 200-day moving average in the Nasdaq. It's 78% right now. If you look at it on a long-term basis, see that? We went high, and it looks like we're coming down, and I don't think we're going to bounce very hard here before coming down. Once we go to this level here, once about 90% of stocks get above the 200-day moving average, we need to cool off, and I think that's what we are seeing right now. Again, I apologize for showing it to you every day or every couple of days, but I want you to understand where I'm coming from and what I'm looking at. Otherwise, you're going to be like, why does he say what he says? There's always a reason for what I say. I don't just say things because of how I feel. So again, if you look at the Nasdaq 100, you will see it's breaking down after touching the 50-day moving average, which is what I thought was going to happen. I thought maybe it would even go a little higher, maybe to the 325 level, maybe even fill this gap. But I was very certain that I was not expecting all-time highs. You can also watch the videos from the beginning of this week, and it'll give you an analysis of how I got here. But we're breaking lower, and if you look at the bond market, you will see, look at that. Remember what I told you the last few days? Again, I hate to say it, but I was dead on. The bond market is breaking down again. There's a strong correlation between interest rates there's an inverse relationship between the bond market and interest rates. When bonds go down, interest rates go up. When interest rates go down, bonds go up. Bonds are going down, that means interest rates are going up. And because interest rates are going up, investors are fearful they're not going to yield as much out of the tech stocks, large cap tech stocks, as they are from other stocks, so it's causing a cooling off effect. Once earnings come out and the Nasdaq can prove that it can withstand pressure, then things will change. But for now, we've got to be very, very, very cautious. And again, the bond market and the Nasdaq are very, very correlated. Now, we were expecting the Nasdaq the bond market to rally, and it did for one day, and then it reverted. When I saw this, I said, folks, we're going to come back down. This is not a bounce. I mean, we went from 153 to 136, and this is all we could get on the upside. That's no bounce. That's a dead cat bounce. That's going to cause bonds to go down, yield on interest rates to go higher, and that's going to cause the large cap techs, which are right now extremely correlated to the bond market, to come down again. Now, in terms of the reports on the table, we've got PPI, Producers Price Index. We had, we had Consumers Price Index on Wednesday, and it was in line. It's showing us that consumer prices are going higher by about 0.4. And according to the PPI, the number is actually looking fairly similar. It's not looking, consensus is 0.4%. And if you look at it on an annual basis, it looks to be like it's moving at 2.6. This will give us a good indication when we combine the PPI with the CPI, Consumer Price Index, Producers Price Index. We can get a good gauge of inflationary pressure. Because if Producers Price Index is staying stable or increasing, but consumers are not, if it's not moving on to the consumer, then things are stable. If Producers Price Index prices are not moving higher, if producers are not, it's not costing them a lot more money to make goods, but consumers are, then it is. So when we look at these together, it'll give us a good indication of inflationary pressure, and that comes out in about 33 minutes. Yesterday, we had the unemployment report, which was actually pretty positive. I want to just very quickly talk about it. We hit the low 700s. Finally. So I'm hoping we're going to break 700, and then next week we'll go into the 600 level. But that's causing the blue chips and non-large cap techs to rally. And as you could see here, the S&P, here we're below the 50-day moving average, but the S&P, we're literally made new highs yesterday. So we're not just above the 50-day moving average on the S&P, we're at all-time highs, and the Nasdaq is in the crapper, excuse my French. And again, it's breaking down. And I think with the S&P and the Dow now breaking down, we're going to see further weakness in the Nasdaq 100. Bond market, Nasdaq 100, large correlation. Now, global economy. I usually start with this, but there's just not that much on the table today that you don't know. So I kind of went past it, but let's talk about it a little bit. World shares were mixed Friday after broad gains lifted major indices to all-time highs. We just talked about that, except the large cap tech. Yield on the U.S. Treasury rose to 1.58. If yield rises, that means interest rates rise and bond markets fall. So whenever you see yield on the 10-year rise, that means bonds are falling. There's an inverse correlation, and if bonds are falling, that's bad for the Nasdaq right now. Again, I'm just kind of trying to illustrate and connect all the dots for you. Biden signed the $1.9 trillion economic relief into law. Yield on the Treasury, as I said, went a little higher. U.S. market surged after Biden signed the law, providing $1,400 checks for most Americans, direct billions of dollars to schools. Thank God, state and local governments, businesses affected by the pandemic shutdown, which began exactly a year ago. Wow, today is a year. Today is a year since we had our office lockdown. Can you imagine? It's a one-year anniversary. Talks between U.S. and China. Now, this is new, and this is actually the only reason I really wanted to get into global news today. U.S. and China officials scheduled, we got to write this date down, March 18th. Put it on your calendar. Alaska. Why they're meeting in Alaska, I have no idea. They expect to tackle disagreements over trade, pandemic, human rights issues. It'll be the first face-to-face with Biden since he came into office between China and U.S., and I can't wait to see it. Now, he may be tough on China, but he's not going to be Trump tough on China. And if Biden's not going to be tough on China like Trump, I think things are going to get a lot warmer. The relationship between China and Trump is going to get warmer, which is why the small caps, as you could see here, the Russell 2000, they're not really small caps, but as you could see here, they made all-time highs yesterday. But if we go further, you'll see they've been rallying ever since the first, right around the time that we had the first meeting, the first debate between Trump and Biden. Basically, when Biden started winning in the polls, the Russell started moving because the Russell has a lot of stocks that have a cross-contamination, if you will, to China. And the market does not see Biden as big of a threat to China as Trump. So just wanted to point that out to you. Now, something important, Amazon. Look at Amazon. It's trading below the 200-day moving average. And look at this. It hasn't made an all-time high since October. Look at Apple. Look at this stock. You got to see this. Apple made all-time highs back in January. Didn't make all-time highs yesterday. Matter of fact, it looks very, very similar to the Nasdaq. This is the Apple, and this is the Nasdaq. Look at that. They don't look all that different. I'm not bullish on any of these stocks. Till FANG stocks that have these 5 or 6 FANG stocks, they have more market cap than the rest of the Nasdaq 100, or about as much. But the bottom line is, folks, FANG stocks need to rally before the Nasdaq can get higher up. And for that to happen, interest rates need to stop going, bond prices need to stop going down, and interest rates need to stop going up. Otherwise, the investors will believe that the yield on value stocks, financial stocks, and interest rates will be better than the yield on tech stocks, which is why they're getting out of tech stocks and getting into the bond market. Because you have to look at volatility on a risk-adjusted basis. So that's the problem right now. And I've been spot on this. I hate to say it. I wish I wasn't. I wish I was wrong and that we broke through this. But I said we're going to stick to this 50-day line and we're going to not go higher, and it's happening. So I've got a couple of stocks. First, I got a bear for you. Checkpoint Software, stock making all-time highs right around end of last year, has not been moving up. Now breaking the 200-day moving average. The 50-day and the 200-day are going to meet if it goes lower. We had a 90-day low and a 10-day high, and it closed at the bottom, and I think the stock is going to go lower. I would enter a sell order around 114.80. I would cover it if we go to the 200-day moving average, and I would take profits right below the low, probably about the 107, 106 level. If this thing goes lower, it's going to break, and it can go all the way to the 90 level. So there's some potential downside in this stock. And again, I don't like the stock. It's a 90-10 to the downside. 90-day low, 10-day high with a reversal to the downside. That's my short for today, Checkpoint Software. I'm not bullish on software tech stocks right now. And there was another one I talked about last week, VeriSign. Let's see how it's doing. Let's see if it's breaking down or not. Yep, looks like it's about to break down, just like the rest of them are. So, yeah, the bottom line is, folks, things are not looking great. So I'm bearish on Checkpoint, but I'm bullish on Diamondback Energy. Made a swing high, went down for 3 days, and now it looks like it's going to go up again. Now, if you look at this stock, it's a clear energy, natural gas exploration. Stock is up 220% over the last 12 months. And these stocks are in play right now. The world is looking to go back to normality. That means people want to go out. Transports, energy, fuel, people driving, people going places. I know that people in my office today, they're taking off. A year ago, nobody was taking off. So today is actually a 1-year anniversary since we had this major lockdown. And it's a big, big difference on Wall Street. So again, I like FANG. And I don't like FANG stocks. I just like the ticker FANG for the long side, and I like Checkpoint for the short side. Now, keep your eye on that Nasdaq. It's going to cause us some headaches before it washes out. And what do I need to see for the Nasdaq to be golden again? Let's see here. We need to see the Nasdaq momentum levels. I'm going to show you. Keep your eye on the number of them above the 200-day moving average. I want to see this line at right here, 50th, 40th, right here. I need to see a shakeout on the Nasdaq, something we haven't seen yet, and something that's way, way overdue. Look at this. This is a 20-year chart. What happens every time we come up here? We come down. This time is no different. If anybody tells you the market has changed, the market is different, this time is different, it's not. It's not. It never is. Now, I've got something really, really important, cool, interesting, and potentially profitable for you. Pay attention. Now, most folks do not know this, but Wall Street runs on a secret calendar. It does. It trades some of the same stocks on the same day every year. Every year, the same stock goes up. Every year, the same stock goes down on a calendar. Now, thanks to this calendar, it doesn't matter. Again, it doesn't matter if a stock has been struggling or if the market conditions have been terrible. It just doesn't matter. When the date rolls around, these stocks generally go up. And then sometimes we have calendars for shorts too. Those go down. But again, if a stock is set to go up on March 12th, it's going to go up. Or at least it has. Last 10 years in a row. All you need to know is when these stocks will skyrocket, and you have the potential to unlock consistent winners all year long on a time calendar. I love it. Legendary trader Tom Busby's proprietary dashboard alerts tell him or alert him when stocks are in a prime window, and when this prime window is approaching ahead of time. So you won't be the last to the party. You will know like a week or two ahead of time. And he wants to give you access to this prime time window. Man, this is very, very cool. Again, it's a calendar. It doesn't matter if a stock is struggling or if market conditions are terrible. It means nothing. It gives us a stock that's set to go up on a specific date of the year. Like March 12th, March 15th, March 8th. On this date, this stock goes up, and it tracks it on a 10-year straight calendar. That means every year for the last 10 years, the stock has done that. And again, legendary trader Tom Busby, who's a good buddy of mine, he's going to give you access to his proprietary dashboard alerts and show you how these prime windows work. Man, I love this. Follow the link below. Unlock this simple trading trick now. You've got to check this out. Tom Busby is really onto something with these calendars. He really are. These prime windows are the bomb. Click on the link below. Unlock this trading trick now. And here's something else you need to know. Make sure to like this video and subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post new videos. And most importantly, have a great weekend and stay away from those large cap techs, at least for now. I'll talk to you guys soon. Bye.